Good morning. It's Harv Jackson from Produce Profit. Uh, there's a plan to try to gain some favor from Trump with the thought process that the 45Z tax incentives are no longer going to be a part of the aviation fuel programs. So a few senators are bringing forward the Fly or Farm to Fly Act, which will expand the use of biofuels in aviation. And that was around, I think, earlier, but it's just to try to get some of that base area that had helped out with the election and trying to get some farm programs that will be favorable for some of the veg oils. And it was putting pressure on soybeans there as well. Brazil had some soybean shipments shut down, and that's maybe what created some of that action that we've seen in the last little bit here. But so Brazilian uh, uh, halted some of the due to plant phytosanitary issues, and there's two companies kind of at target there, and maybe it's not a surprise that there's a couple U.S. kind of companies there too, but that's not what the article actually mentioned. But conspiracy theories that we all have might be lean in on that one a little wee bit. So they are light at this time of year, especially during harvest, and as it says here. But there's some more possible theories that people put behind this as well. Uh, and it looks like there could be some increased pace of shipping or orders from China or from China right now, and it could be just to try to win favor of the sanction or the tariffs that are going to come on. But and here's an interesting note: and China does buy like 70% of the Brazilian beans, and China buys more than 60% of soybeans shipped across the world, which is a kind of interesting fact. And so another target that I'm always paying attention to because of the large consumption and lots of tariffs thrown around to protect the farmers here. And India is actually going to increase their budget by 15%, which is quite a lot. And there's some stats in here that I kind of highlighted. India is the second largest producer of rice, wheat, sugar, and has grappled with high food prices, which surged 10% year on year in October. And and they've basically lightened up the policy for some of the pulses, but they actually tightened up the policy for wheat to try to curb some of their pricing issues that they're seeing there. Um, and what are going to be the priorities in the budget? It sounds like there's going to be a fair bit of money reallocated into this program because of just the size of the India's workforce. It's 45% of the India's workforce is actually involved in farming, but it only makes up 15% of the overall economy. And putting money towards that kind of a workforce is actually probably going to be very substantial and help them. Uh, this article is just talking about how the guessing game of what to watch for trade in this trade war, and I think this is kind of what highlights it all. U.S. farmers are in line of fire for the potential trade war, but I'll probably throw the caveat out there that there's probably a little bit less involved as they just previous article the shift of how much Brazil is actually supplying on soybeans, and soybeans is the target because they're not always in the business of buying corn. Malaysia palm oil is down, so this one actually goes through the seasonality of when does the Malaysian palm oil have its greatest demand, um, and there's a little bit of a spike coming and then a drop. But interesting, this writer of the article basically said that 4,000 ringgit is the price. Well, that brings us back to prices that we've seen uh, 4 or 5 months ago before this run up. So that might not be very favorable for us at all. So let's just have a look at what the pricing is doing. Canola is almost flat. Rapeseed is down. Soybean is down as well, but it was down pretty heavy yesterday. Palm oil basically flat at 43 ringgit or 4,300 ringgits. Crude oil is slightly up, and soybeans are down a little bit more at 10.52. And the wheats are down a couple to 3 cents as well. Canadian dollars down a little bit as well. So let's just look at the markets. You can see that this is actually, it's really not doing a whole lot here, and it's not getting anybody really excited. But it you could probably pick a date and you look at. There's been some bigger candles and everything, but and a lot of that could be just how the inauguration is kind of flowed through, what anticipation going into it, and we're kind of trying to find middle ground. You got little wee candles here that don't have a whole lot of movement in the day's trade. So the new crop November actually has a little bit more support. It's actually looking like it's trying to gain some favor to try to get a little bit more planting into a new crop. Now that seems pretty far away, but it's going to be coming right around the corner here as well. So this is the price of European rapeseed in Canadian dollars minus the price of the Canadian canola. So it's $153 more expensive than Canadian canola. So that's still supported for Canadian canola. But when we look at rapeseed here, and drawing a line on the chart, anybody can be drawing lines. There could be lines here and say that's broke support, that broke support, that broke support. But we are making higher highs, but we are at the bottom end of the potential range if we're going to be following these support lines up. Soybean oil, big down day yesterday, and a lot of that might be to do with that phytosanitary issues that Brazil is having, and it's kind of pushed this market down. Palm oil. So here's the level that we're talking about that could be the highs. Well, that was the previous highs back into the fall. So I'm not terribly excited about if that other writer of that article is correct. That's not going to be super supportive on the veg oil market. Crude oil sounds like looks like it's just maybe going to continue its slide here, but we'll have to see. It had a pretty good run, and now it's pulling back. Soybeans, same idea. Like it broached the 78.6 retracement value and a couple of red candles here. And if we look at slow stochastics, it looks like it still could potentially hold, but I somehow think that this is still a buy here. So if we look at what was involved in the trade war, soybean was, and you could probably pick the date when the trade war was on, and the trade war was what was on Chinese goods that Trump put on, but China imposed counter tariffs on soybeans. Here's your Canadian dollar, basically doing nothing in this last day, really not doing a whole lot. The erratic day was back here when they were talking about tariffs specifically on Canada, and now the news is digesting it. So you can see just where that is. So you can see we've been basically in this trend since December. So here's corn currently, and it's still a buy, even though you've got a couple red candles there. There is going to be some sort of top here. And like I was saying before, corn was not a part of the counter tariffs by China because they don't buy a whole lot of corn, and they're not in the market to buy corn from Canada or from US very much. They actually are pretty good about producing their own corn. They're just not very good at producing their own soybeans, and hence they have to buy large volumes. So here's wheat. We had a couple of days of green candles, but not breaking through some of this support above us at the 610. And there's lots of levels above that would need to get beaten to be extremely bullish. And if we look at slow stochastics, it's just getting to the top end of the range to consider whether we should be in or out of some of those trades. Here's your December, which has a lot of carry going from the current front month to December. December is at 652. Still looking for some futures first kind of contracts at the $7 mark. Hard red winter actually it is and still remain to be trading at the 38 retracement value. So it's right at it and needs to break through to probably get to higher values, of course, for this market to be bullish. Same thing with Chicago. Chicago actually has more red than the other wheats, but looking for some support there. Milling wheat kind of going sideways. It was trading quite a bit higher than some of the North American markets, but right now it's trying to find a base, and I don't know if this is indicative of what Russia's doing, but or where are we in the growing season? Are we looking for some sort of indication of what kind of breaking dormancy? What does that crop look like? And that's all I have for you today.